Well, good morning. We just had the supply and demand report come out, and we're going to review that, starting off with grains. We've got the carryover for soybeans in the 2018-2019 average guess was 920 million bushels. It came out at 995 million. For the 2019-2020 soybean carryover, the expected it would be 910 million bushels. It came out at 920, so both of those numbers were higher than thought. Production for estimate for soybeans was 4.150. Now looking at corn, the 2018-19 carry out came out at 2.095. They thought it would be 2.055, so higher there. Everything's higher so far. We've got the 2019-20 carry out estimated in corn at 2.485. They thought it would be 2.131. Production estimate is at 15.030. So far, I mean, just everything seems to be bigger than they thought, more carry out than they thought. Wheat, the carry out came out at 1.127 for 2018-2019. They thought it would be 1.097. Looking at 2019-2020, the wheat estimate was 786. It came out at 1.141. So really, all of this is negative. The reaction of the market since the report came out, soybeans were down 1.5 to 2 before the report. Right now, they're down 4 to 5 lower. So we are getting a negative reaction there. The corn market has a bigger negative reaction. The corn market was up about 1/2 cent to 3/4 cent. Right now, it's down 6. So we've gotten hit pretty hard in the corn. Wheat, that number that came out was also a negative number. Just everything was negative. Wheat was up 3 before the report. Right now it's down 4.5. So the question is, with what's happened this week, which is lower markets due to the trade tariffs being escalated and the market reacting in a negative way to that, how much of whatever is negative has come into the market in advance? And now we come with this number. We're getting an immediate negative reaction. It appears, at least in soybeans, we're starting to see some buying at these lower levels. So we'll see. It's a little confusing. Looking at cotton, the planted cotton was 14.10. They thought it was going to be 13.78. The 2018-2019 U.S. production, believe it, unchanged. And then we've got the ending stocks. U.S. ending stocks were a little bit of a surprise, higher than people thought. Came out at 6.40, and they had thought that was going to be, I think the average guess was about 4.4, or at least it was that last time. So we have bumped up the carry out. The world number came out and carry out 78.69, so that also moved up. And so across the board, all these numbers are negative. As far as the reaction in cotton was down about 38 before the report. Now it's down 71 in the July, down 42 in the December. So the report by itself is negative, especially for old crop, and the market is not too far from the lows of the day. Again, the question is, you've already been really punishing this market because of the trade situation. How much of the negative that could be thrown at this market has already been factored into the market at these low levels? That's what's a little confusing about the market right now. And it opens the probability that people know that, and we'll see some buying at these lower levels, figuring this market has been beaten up pretty good in advance of this report. The feeling was this report would last for a short time, and then we'd put it behind us and be looking at something else. I think that probably will prove correct, although everything is down right now. So that is it. That's it for our monthly crop market review, and we'll talk to you later.